Ladies and gentlemen, I want to get straight into this video with what is happening here on the day today with AMC Stock. AMC Stock is trying to recover and even possibly go green by the end of the day today. Now, we're going to talk about what's happened today, briefly talk about what's going to be happening tomorrow. But I do want to take a big focus on the Atlanta Fed GDP tracker. What they're estimating compared to analyst estimates are way off. So someone is massively wrong on the Q2 GDP report when that does come out. Now, and we're granted 2 months into Q2 so far. So it's not going to be too long from now when we do get that report. I also want to take a look at this article that is forecasting AMC's revenues to soar over the next couple of months. And I also want to talk about something we talked about in the last video, where clearinghouses could shut down, where there could be a collateral crisis. And this comes from Jamie Dimon, the CEO of JPMorgan. Yeah, we've talked about a collateral crisis a lot here on this channel as of the last couple of weeks, but it's getting realer and realer as we get closer to an ultimate default, guys. Let's get into everything you guys need to know. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. So, number one, the default, and what Jamie Dimon said. So, the default would be after June 1st at some point. Now, Jamie Dimon said today that JPMorgan is preparing for a US default. They don't think it's going to happen because it's never happened before, but it doesn't look good where we currently are. That JPMorgan needs to prepare for a default. And that would be a catastrophe, right? We've heard this over and over again. Jamie Dimon says there could be a collateral crisis, as well as could cause credit to dry up and clearinghouses to not be operational, right? And it says right here, says such an event would ripple through the financial world, impacting contracts, collateral, and clearinghouses, Dimon said. Now, in the last video, I on the thumbnail of the last video, it's the picture where the buy button is gone. Now, is that a possibility that could happen? Yes, but I highly doubt that would be the case. Now, it's very uncertain if clearinghouses just in general would have to shut down, if there would be just such a back order or not enough capital to fill orders. Hard to say. We've never had this happen before. We've never defaulted before, right? So I think the clearinghouse situation is less likely because I don't think an ultimate default will happen. But the collateral crisis. Now, just Jamie Dimon says getting close to a default, markets are going to deteriorate. JPMorgan in their war room is going to start meeting daily on May 21st. They already have been gathering once weekly. A rate that will shift to daily meetings around May 21st, and then 3 meetings daily after that, he said. They're going to meet 3 times a day. That's pretty bad. Now, Jamie Dimon says that Democrats and Republicans essentially won't come to an agreement until something breaks, until the stock market crashes, until the bond market wigs out, and more than likely, that would be a lot of people selling bonds and the rates shooting up on those bonds. Because if investors don't want to own the bonds because, hey, you're about to default and who knows what's going to happen to the economy then, they might want to sell those bonds. At the same time, if they were to default, well, where else would you be? Probably the best place to be would be in cash at that point. Or in treasuries, believe that or not, the instrument that is defaulting. Because if you default, stocks are in the toilet. Everything's going to be in the toilet at that point. So where do you really go? So it's going to be interesting, and expect a lot of volatility in the bond market over the next coming weeks. But JPMorgan is warning that panic will start to overtake markets as the U.S. approaches the debt default. So a couple things I wanted to touch on there. I think the collateral crisis is a lot more likely than clearinghouse is shutting down. If we get an actual default, then clearinghouse is shutting down could be a bigger possible outcome, right? But I don't think anyone wants that to happen. I don't think anyone is going to let that happen in Congress. I think there would be a last minute deal before that happens. But in the short term, that could mean pain for the stock market, right? And that could put pressure on collateral, put pressure on stocks that are used as collateral in short positions such as AMC. Now, with that being said, what we're going to have tomorrow in terms of catalysts for this market is going to be the Michigan Consumer Sentiment Survey. Now, we talked about this in the last video. Just briefly want to talk about it again if you guys did not see that last video, because tomorrow's Consumer Sentiment Report is going to be probably as important as the CPI report, and that is because inflation expectations. Forget everything else in this report. Inflation expectations last month went up 1% from 3.5% to 4.6% for 1 year inflation expectations. If this goes higher, you got a problem, because one month, one data trend point, it's not a trend. That wouldn't be like indication of inflation expectations getting unanchored. But if you get 2 readings in a row, well, that's starting to look a lot more like a trend. So that's going to be important. You're expecting 4.6% again for the inflation expectations for the month of May. If that comes in higher, very negative. Same thing with the 5-year inflation expectations. This might be more important if this does go up by a bit. Last month's reading went from 2.9% to 3%. If this goes up to something like 3.3 or 3.5% tomorrow, that would mean a very red day for this market. And I think that is very important to stress here in the beginning of this video, because it's a possibility based off what we've seen just the last time around. Now, if we do go ahead and take a look at the overall picture here with AMC and the Ortex data, you're getting $706 million worth of short positions in AMC, 25% short interest of free float, 32% free float out on loan, 166 million shares currently out on loan, days to cover sitting at about 5, 3-month cost to borrow rates at 193.5%. with 100% share utilization. If we take a look at the cost to borrow rates here today, cost to borrow max sitting at about 281%, cost to borrow average at 98.79%, cost to borrow minimum at 0.35%. Interactive broker short availability has 1.1 million shares available with a cost to borrow fee of 116%. So a softer day on cost to borrow fees, but they're still super high, and you got to take these with a grain of salt, because we're only getting interactive brokers here, which tends to favor institutional clients. I don't know too many people with an interactive brokers account, right? So you do tend to get lower rates from there compared to, other means of getting access to shares of AMC to short, like a Webull or a Robinhood or something else is probably going to have a higher cost to borrow fee than interactive brokers, guys. So there is that. If we go ahead and look past the debt ceiling, markets are expecting a 43.2% chance of a rate cut in July. Now, a rate cut in July only comes if the debt limit does not get raised, if some kind of black swan event does happen. So right here, bond investors are expecting some real fear and panic, just like Jamie Dimon is saying, in the markets by July 26th, and that will give us a rate cut. So believe it or not, guys, a rate cut is not good. A rate cut is not what you want to see right now, because that means something is dramatically wrong somewhere in the economy or in the markets. Now, if we take a look at the Atlanta Fed GDP Now tracker, I just want to bring this to your attention because it's showing a huge disconnect. For Q2, the Atlanta Fed is estimating GDP will be 2.7%, and their last update was May 8th. The average consensus of analysts is about a 0.3% increase to GDP. So analysts are expecting 0.3%. The Fed's expecting 2.7%. Someone is wrong there to a big margin, right? Either markets are wrong, huge, or the Fed is wrong, huge. Now, even the top 10 analysts with the highest estimates for GDP for Q2 are only at about 1.3%. Still double where the Fed is at 2.7%. So even on the high end of estimates, you're over double what the Fed is expecting. I think this really sets you up for big, problems and a big, hate to say it, potentially a downside miss if the Fed estimates do continue to stay this high. And that could cause a lot more fear here in the market. So there you have that. That is something I did want to point out for you guys. But on top of that, I want to specifically talk about AMC as well here in this video. It says, analyst predicts AMC revenue will soar this summer. Paul Jabaradian, I don't know how to say that. Comscore senior media analyst predicts AMC Entertainment's revenue will soar this summer as the industry begins to take off. Disney's Guardians of the Galaxy Volume 3 exceeded box office expectations this past weekend, securing $118.4 million domestically and bringing its global total to $289.3 million. IMAX announced it grossed $25 million from the debut, the company's biggest global opening thus far in 2023. Those results on top of Universal's The Super Mario Bros. Movie, which surpassed $500 million domestically, adds to early momentum heading into the summer box office season. Quote, I think it's going to rival the pre-pandemic levels for summer box office, Paul said. Comscore senior media analyst told Yahoo Finance. Paul says that upcoming films like Pixar's Elemental, Disney's The Little Mermaid, Universal's Oppenheimer, and Warner Bros. Barbie as just some of the many films that will drive revenue for AMC Entertainment. This is just a bevy of riches on the way to the multiplex, he said. According to the latest data from Comscore, total box office grosses have hit $2.85 billion so far this year, 23.3% below 2019's $3.74 billion over the same time period. So goes on to say that box office, numbers are coming back, right? There might be pre-COVID numbers, 2019 numbers for this summertime, and that's potentially going to be something that people are not really expecting for AMC. Although AMC typically does beat on earnings, the expectations are not all too high for AMC, which could lead to a big upside move for AMC stock. So there you have that. There's a lot of other things said here in this video, or in this article. So I do highly recommend you guys read this for yourselves. We're not going to get into all of it here in this video, and I will link that down below in the description of this video. But I do want to point out that Paul argues that the industry is heading in the right direction with more than 30 worldwide released films slated for the rest of this year compared to 2022. More movies, more often is my mission statement for the industry for 2023. Currently, the box office is on track to finish off 2023 above $9 billion. Typically, a normal box office season pre-COVID would be like $11 billion. It stalled at $11 billion for years and years. So you're pretty close to that. And it's not going to take just a couple films doing better than expectations to get you to $11 billion to potentially let AMC see some sweet, sweet profits and to really help out that fundamental picture for AMC stock. Nonetheless, that is what I have for you guys on that. If we take a look at the option activity again for AMC here today, I reported in the last video that AMC is being attacked, right? It's being attacked by the shorts, and they're going out and buying tons of options. Guys, I have another update for you. The $13 put, a new order coming through for May 19th, deeper in the money. This is a $3.95 million trade. That is huge. That is a problem, right? that is causing artificial shorting to be taking place in AMC stock. I mean artificial because it's not recorded in the short interest. It's market makers that are going out and shorting these stocks into oblivion, right? It's hedge funds that are doing it when they buy these in the money puts that are so far in the money. AMC is $5 per share. What are you doing buying a $13 put? You're trying to suppress the price of the stock. That's what that is. Now, July 21st, a $10 put as well. Another one for $3.1 million. So just there, you have over $7 million more of puts on AMC that are deep in the money as well. A $10 put and a $13 put. So the story's pretty clear here. They're terrified of letting AMC rally. They're trying to do whatever they can do to push down the stock when it's really not working as much as you would expect it to, granted the size of these orders that are coming through. You can see that the volume for this Friday on the total option chain for AMC is 65% positive today, 65% calls, 35% put. So people are still going out. They're buying those bullish options. By people, I mean really retail investors. And even over the next couple of weeks as well, once you start to get into June, things start to look a little bit less bullish, especially June 16th. Calls open interest at about 35%, puts open interest at about 65%, a little bit more bearish towards the middle of June. But nonetheless, AMC stock is holding up right now very, very well above the 50 and 100-day moving averages. As long as you can hold these levels throughout the rest of the day today, which is $5.21 for the 100-day moving average and 50-day moving average at $5.17 per share. So let's say $5.21. I'm very bullish on that. That is very bullish to me. Even on the downside, you're finding support above these moving averages, in which we got rejected from a lot over the past couple of months. You're finally above that and holding support above that. So we'll see what happens towards the close of the day today. All in all, so far, I think this is pretty bullish information that I'm bringing to your guys' attention. Number one thing I will ask you to do as we wrap up this video is go down there and comment. Comment any questions, concerns, or thoughts that you have about this video, about any information that is said here in this video, or add your own commentary. Feel free to do that. Hit the like button and subscribe to the channel on your way out. If you guys also want to come trade with me live in real time, link down below in the description of this video as well as that article that I do highly suggest you guys read as well. So thank you for watching, and I will see you in the next one.